Good morning, good afternoon, everybody. My name is Peter Moulton, and I am with Fulton Grace Coaching, Training, and Education here in Chicago. And I have asked my partner in crime, Fady Mseih, to come, who owns FM Accounting. And we today are going to be presenting on the power of the P&L statement. And this incredibly useful device to measure your success throughout the period of a year. Let me introduce myself real quickly. I've been in the real estate business in sales, started in 1997, and I've been coaching since 2006, so 19 years now. And I've helped hundreds of agents build a very successful business. Fady, would you like to introduce yourself?
Yeah, absolutely. Thank you, Peter. I'm super excited to speak with you guys today. My name is Fady Mseih. I'm a CPA and I'm the founder of FM Accounting PC. I've been in the business since 2014, and at our firm, we focus on monthly accounting and bookkeeping for small businesses and realtors, and we also focus on tax planning and really optimizing taxpayers' is tax position.
Excellent. I want to point out that on this particular slide and the last slide of the conversation, we do have QR codes that you can scan that'll take you directly to our contact information, should you wish to get in touch with us. We also are going to be doing a Q&A session at the end of the presentation. So let's dive right in. We don't want to beat around the bush here. So one thing that's incredibly important is that you understand that you cannot improve what you don't measure. And so what we very much believe in our coaching with our clients and in partnership with FM Accounting, that you will thrive if you track everything. And data is your friend. And what we're going to go through today is a very simple P&L statement. And what we're going to do is point out A, how to read it, how to understand it, but B, all the benefits that are shown to you through the P&L process. So let's jump right in. The objective today is to teach the importance of monthly P&L statements and how to read it effectively and manage your business finances. Fady, do you want to speak real quickly to the importance of doing it monthly?
Yeah, absolutely. So, piggybacking off of what you just said, Peter, data is everything, right? The numbers are everything, right? And so if we can really dial it in on, the numbers on a live basis, right? On a most recent basis, we'll be able to better predict our, future cash flows and make decisions for our small business.
Excellent. Let's keep going. So I want to point something out that I speak to my clients about on almost a monthly basis, which is the fact that they are small business owners. And one of the things you could have done, you could have bought a dry cleaner, you could have bought a Dunkin' Donuts. If you had a couple $1 million in cash, you could have bought a McDonald's. We all chose to get into real estate. But the point that I'm trying to make here is that you must consider yourself the owner of a small business. And as we go through this P&L process, you wouldn't own a dry cleaner if you didn't know how many shirts you were cleaning every month. You wouldn't be able to understand your operating income. You wouldn't be able to understand your expenses. You wouldn't be able to track all of these things if you did not invest time and energy towards knowing how you are creating financial health for yourself. And that is the monitoring of all of your numbers, tax planning, etc. Do you have anything you'd like to say, Fady?
Yeah, absolutely. So, like Peter said, you guys are really a small business, right? You guys are independent contractors of your brokerage firm. But, being a small business, Peter knows this, I know this, you guys know this, you have to wear multiple hats, right? And one of those hats is finances. And it's, in my opinion, I'm a little biased. I'm a CPA, right? I'm an accountant, but I think it's one of the most important It's a fundamental hat to wear for the reasons we're going to get into, right? But knowing your numbers and being able to forecast what the future is going to look like is really going to help you grow your business.
Let me say this. So the way that we do business planning, we do one business plan for the year, and then we revisit the business plan with our clients every quarter. And the way that we begin the business planning process is we forecast earnings for a calendar year, and then we break it all the way down into daily activities that support new revenue generation and the creation of new relationships, whether those are leads that you purchase online or a referral-based business that you are working in order to create clients for yourself. You know, it's interesting. We talk about in coaching the fact that every relationship you have in the world, you should be working to deepen it on an annual basis several times a year. And what I think most people don't realize is that we suggest that the cultivation and deepening of a relationship should last for a period of 21 years. You should always assume that you're going to deepen a relationship for 21 years. And you will see in the P&L that we're going to visit in just a moment that we ask our clients to reinvest 10% of their gross in marketing. So if you're making $100,000, we're asking you to spend $10,000 on marketing, brand creation, brand expansion, and relationship management. And you'll see in this particular P&L that this person does an excellent job, and we've allocated everything correctly, and she's achieved a growth rate of roughly 20% in the last year, which is amazing. But you can't know these things. We can't measure the success of what we are doing unless we track it. So let's jump right in. This is a view into our coaching portal at Fulton Grace that represents 10 years of closed data for our clients in the Chicago metropolitan area. Please understand that our objective every single year is to reduce the seasonality of your business so that you have consistent income every month. But what you can see in Chicago is that January is generally the lowest month of production. It almost triples in February, up even more in March. Interestingly, in the Chicago metropolitan area, in April, sales tend to go down. May is always the best year, and then June follows closely behind. What is interesting about the Chicago metropolitan area is that 65% of the production happens before July 1st. You can see that the balance of the year is relatively low in production, and actually, fascinatingly, July is almost the equivalent of December. December follows July very closely. So, Fady, do you want to talk about seasonality and tax planning real quickly?
Yeah, absolutely. So, when I look at this graph, one thing that really stands out to me, like Peter mentioned, right, the first half of the year is where, the bulk of the income is earned, right? So, in my mind as a CPA, what I think of right away is you guys are all self-employed. You're required to pay quarterly estimated tax payments to fulfill your tax liabilities, right? That's for the Fed and for Illinois, right? So, when we're running P&Ls and analyzing your data, when we have it on a monthly basis or a quarterly basis, we can really dial it in and drill down on how much taxes you owe to the Fed and how much taxes you owe to your particular state. And just so everyone knows, I work in all 50 states, right? So, yeah, this is super important, right? Like, if you can dial in on your taxes, it'll really help you even out your cash flows throughout the year.
Absolutely. Let's move on. Whoops, that wasn't what I meant to do. So let's talk briefly about the value of a P&L. We're going to go through these lickety-split here. So clarity of income and expenses. This is a critical component of everything. What I feel is that most real estate brokers, most real estate agents, we call them brokers in Illinois, have somewhat of a clear idea of what their income is, but they do lack insight into their expenses. One of the things that a P&L provides you the opportunity to do is spotting trends. Do you want to say more about this, Fady?
Yeah, absolutely. So, when you can dial it in on your numbers and really know what you're spending, you can see if you're potentially spending too much on advertising or too much on meals and entertainment. So when you prepare a P&L on a monthly basis and you know your data, you can really see, is my income growing? Are my expenses creeping up? So really just dialing it in and really understanding your data is super important.
And one of the things that we do in our coaching with our clients is we revisit on a quarterly basis your business plan, and we track the metrics that are necessary to create success. But one of the things we review on a quarterly basis is where you are at financially compared to your goals, which includes the P&L statement. And so one of the things that as I said before, our clients do is they tend to spend roughly 10% of their gross reinvesting into marketing and brand expansion and relationship management. And we do track the ROI on every activity so that on a quarterly basis, do I need to add more here or pull back here? And the rule that we try to get our clients to follow is that you should spend $1 to make two. That's the best rule. If I can spend $1 and make two, I'm in really good shape. One of the things that we're experiencing right now amongst our clients is the diminishing returns on online leads, and the actual capture rate over the last 4 years has gone from roughly 4% or 5% down to 1% to 2% for most people. And so there is a reallocation for some people that are having less capture on online leads into more referral-based activities. And everything we do is intentional and everything we do is tracked. The goal setting we talk about on a quarterly basis. Let's talk about tax prep made easy. Fady, my intention with my coaching clients is that they don't have to pay attention to any money at all ever, because they are paying you to do monthly bookkeeping and prepare their taxes, both personal and business. Can you say more about that?
Yeah, absolutely. So, with the P&L, you can use your data on a monthly basis to really make decisions. But one of the reasons we do it is also to be very proactive with your bookkeeping, right? So we can have your numbers ready for tax season. So we have a turnkey model for all realtors where we work on their monthly accounting and their monthly bookkeeping to prepare their profit and loss statement, to prepare their balance sheet, to prepare their statement of cash flows. And for some clients, we meet with them as well quarterly or every few months to kind of dial it in on their numbers. So when we do this, it really takes the burden off of you guys. You guys are managing multiple different things as small business owners and wearing multiple different hats. I encourage my clients to continue to do the things that they do best, which is go increase your income, go get more sales. But yeah, ultimately, if we do the accounting on a monthly basis, it's stress-free for you come tax season. Books are ready to be filed.
And let me say this, you guys, if you are not spending time in your genius, which is the creation of new revenue and new relationships, you are losing money. And my opinion is that to pay someone to do monthly bookkeeping and to pay someone to provide a monthly P&L statement and handle the accounting for me, I am actually making money on paying those fees. There's maybe 10% of the people that we work with that are adequately equipped to do their own monthly bookkeeping. And my point is, why would you ever spend money stressing or spend time, which is money, stressing about bookkeeping when you can have someone else do it and you don't have to think about it? Now let's move on to point 6. And this is something that I think is vastly underaccounted for in the conversation about real estate. We coach our clients to create long-term wealth in the investment of real estate. And that can take many, many different forms. But what I do want to articulate is this. you need to be investor ready in your life. You need to be ready to procure loans in order to create long-term wealth for yourself through the investment in real estate, in whatever iteration of real estate that is, whether it's Airbnb, multi-units, single families, whatever that is. I find that so many agents erroneously declare as little income as they possibly can in order to pay the least amount of taxes, and it excludes them from the opportunity of investing in real estate. Do you want to speak to that very quickly, Fady?
Yeah, absolutely. So your financials are pretty much your key to getting loans, right? So your tax return and your monthly financial statements, right? Nowadays, getting loans are much more difficult. So if you can be very proactive and have your tax returns ready and your financial statements ready for a loan officer or an underwriter, your odds of getting a loan are going to increase. And to your point about having showing less income or having less income on your tax return, uh, it's your odds of getting a loan are going to be a lot less. So having everything ready and being proactive with your P&L and your tax return is going to pay dividends in the future when you're purchasing rental properties or maybe purchasing a business and need a loan.
And we recommend to our clients that they purchase an investment property of whatever size, of whatever amount, every 36 months. And we actually introduce a very brief and simple plan of purchasing three flats over a period of time and financing them correctly. They cash flow correctly. We actually recommend that our clients attempt to finance these multi-unit buildings over a period of 20 years instead of a period of 30. It all depends on what age you are and when you need the cash flow to perform. But let's say you're 30 years old, you finance something over 20 years, you pay it off by the time you're 50. Well, let's say in the Chicago metropolitan area, in 20 years, 3-unit buildings, let's say they cash flow at $12,000 a month, and you now own 3 of them. Well, that's $36,000 per month in passive income that you're going to carry forward into retirement. So please, as we go through this conversation and you think about your financial health personally, please feel free to reach out to us. Somebody did ask for our contact information in the chat, which we will provide during the Q&A session. But also at the very last slide of this, we do have our QR codes that allow you to reach out to us, and it does provide our contact information. Let's go right into the next section here. Fady, you recommend the use of QuickBooks or a similar program. Our clients all utilize QuickBooks, and can you speak to the importance of this?
Yeah, absolutely. So, I'm not paid by QuickBooks to say really good things about them, but it's been our software of choice at our firm. And, it's really very user friendly. One of the things that I like about QuickBooks is that it has this bank feed where you can connect all your bank accounts, your checking accounts, your credit cards, loan accounts. You can connect it all to QuickBooks and it pulls in all the transactions for you. What you then do is then you can categorize them. The other really cool thing about QuickBooks is that there is a feature where you can automate some of the categorizations in your chart of accounts, right? So, for example, if you consistently spend money on advertising with Zillow, you can create a rule where Zillow always goes to advertising and marketing. And then what I really like about QuickBooks and what I've heard from all my realtor clients and all my clients in general is they have a really awesome user-friendly mobile application where you can run live reports and see your P&L at any point on your mobile. So I really love QuickBooks. There are a lot of other softwares out there, but I would say 95% of our clients use QuickBooks.
Well, the other interesting thing that they have on there that is critical to everybody in real estate is automatic mileage tracking. Can we just speak very quickly about that? at one point was under the misinformation that all you needed to do was track 90 days of mileage in order to write off X amount of miles. That is absolutely not true, right? I have to track all of my mileage and have a record of it in order to write that off at whatever it is, 63 cents a mile or whatever it is now.
Yeah, yeah, no, exactly. So it has QuickBooks has an app where you can it's like a GPS basically, right? So anytime you're going to appointments and showings, you can turn it on and it'll track exactly where you went and how many miles that you drove,
And
right?
then you can categorize it by swiping right or swiping left. It's genius.
Exactly, right? And so you have the choice, right? You could go the old school way, right? Where you could write down at the end of the day, at night before you go to bed, where you drove to and what client it was for. Or you could do it digitally through QuickBooks and it just automatically gets fed into the system. So our clients love that.
All right, let's get right into it. So tell me, what is a P&L statement really quickly?
Yeah, so a P&L is basically a summary of your income, your revenue, and your expenses over a specific period of time, right? So that could be monthly, quarterly, annually. Why we do it monthly, again, it's so that we can make adjustments, right? And so we can pivot and track our expenses and see if we're overspending or underspending, in the form of advertising or whatnot, and just really, make decisions for our business to grow.
Fantastic. All right, we're going to talk briefly about how to read a P&L. And the way that you read a P&L is you always read it from the top down. And so do you want to run through this in the next 15 seconds, Fady?
Yeah, so you've got your revenue at the top, and then you've got your cost of goods sold. And in your guys' particular case, as realtors, it's really direct costs of services. And these could be things like, if you're paying closing costs, which some of the times these are rare, right? Or referral fees, those are direct costs of sales. And then you have your operating expenses, and then you have your net income at the bottom of your P&L, right? And just net income is effectively your take-home pay, right? That's exactly what you're going to take home, but that's before taxes, and that's one thing you want to keep in mind. Net income is before taxes on the P&L.
Great. And the very bottom of it is net profit. And would you would you say, Fady, that we're all here to make a profit?
That's exactly correct. Absolutely. That's the number
I,
we want to see continue to go up.
profit is not a bad thing. Profit is not a bad thing. And let me also say this. The fact that you have to pay taxes means you made money, right? And so
Exactly.
the more we plan for it, the easier it is. The worst thing that happens to me in a coaching year is when one of our clients calls me and says, "Hey, I made $150,000 last year and I didn't put anything away for taxes, and I'm really in deep trouble." And you know what the fact of the matter is? Between you and myself, Fady, we will dig them out of the hole and get them back to a place of feeling empowered about their finances. But gosh, they don't have to make that mistake.
Yeah, yeah, 100%. And one of the tools we use is making sure taxpayers are paying their quarterly estimates, right? So instead of at the end of the year or come tax time, you have this fat tax bill to pay. If you're paying quarterly, you're evening out your cash flows.
Right.
So, and one more thing, like you said earlier, Peter, paying taxes and making income is good. But what we do is we want to optimize your tax situation, right? And we want to go to our toolbox and really figure out strategies on how we could lower that legally, right? And we want to pay our taxes, but we want to pay the least amount possible legally to Uncle Sam.
100%. All right, let's dive right in. So this is an actual P&L statement from one of your clients. And I want to dive in very quickly here and talk from the top down. And we're going to do this super quick, but I want to point out some specific things. So the very top of this, you can see that our client made $216,207.06 in 2024. Then we go down immediately after gross profit and we go into expenses. And what you can see is that they spent 3680 or 1.7% of their income on taxes and financial services. Here is a great representation of our clients and the fact that they spent 9.72% or $21,014 on reinvesting into marketing. That is why this particular agent grew between 25 and 30%. And Fady, you want to walk through really quickly the balance of this P&L?
Yeah, absolutely. And just to bring to your guys' attention, you might, so this is in particular, this one here is an S corporation. Without getting into too much details, it's a way that you can save money on your taxes if you form an S corporation. That's why
Let's
you'll see.
explain that really quickly. What is the
Yeah,
penalty
absolutely. So,
of not being incorporated? There's a penalty specifically.
yeah, so when you're not an S corporation, all your earnings or your net income, let's call it, is subject to self-employment taxes, right? Payroll taxes. And what that number is it's 15.3%. When you're an S corporation, and let me just backtrack for a second. That 15%, 15.3% is only payroll tax. That's not like your ordinary bracket tax. That's just a tax that you have to pay for being self-employed. If you're an S corporation, you're allowed to pay yourself a salary, a reasonable salary, and only the reasonable salary is subject to payroll tax. So in this particular case, this agent here paid himself $48,000, and only that $48,000 is subject to payroll tax. When you look at the bottom, you look at net income, the $99,000, that's not going to be subject to payroll tax.
That's amazing. And it's so important for people to realize that it is important to organize yourself as a corporation for tax savings purposes. Would you agree with that?
Yeah,
And those,
absolutely. Let's dive in just real quickly again on this example, right? So $99,000. If we add in the salary that he paid himself, this guy makes about 150 after expenses, right? So $150,000. If you weren't an S corporation, you'd be subject to self-employment tax 15.3%. So you're looking at $20,000 in payroll tax, $22,000 in self-employment tax. In his particular case, he's paying $7,500 in payroll tax here. The rest of his income is just subject to ordinary income tax, that $99,000 that you see below.
great. The next few slides, we're going to dive more into detail about each section of this. So this is a monthly statement, P&L statement for the entire year. And I don't want to go into detail in every month, but what you can see here is total income on the top. Whoops, sorry about that. Total income on the top. January, they made 3,200. February, they made roughly 3,400. March, they made 15,700. April, they made 57,600. May, 40. June, 29. 8, 7, 18, 10, 3,400, etc. So this is a great demonstration of the seasonality of the business. What this allows us to do is have a conversation, A, about tax planning and paying quarterly taxes. And, by June, they're going to pay the majority of their taxes. Let's say they pay 60 or 65% of their taxes. The other thing is the understanding of revenue and potentially how they need to save money in, let's say, May, June, July, or April, May, June, in order to cover the spread for the rest of the year. Obviously, our goal as a coaching company is to reduce seasonality through ruthless daily activities. And we have a very tried and true and sequential formulaic way of guiding you into your business. But I think this is a representative of the fact that tax planning is so critically important. Would you agree?
Yeah, absolutely. And one of the things that we do that our clients really like, at our firm is we always suggest for them to open up multiple bank accounts, multiple checking accounts, right? And so the reason we do that is so that the brokerage firm can deposit a percentage of their commission into each one of those accounts. And one could be your operating account, right? For those normal expenses that you see here listed. One could be a tax account. And then one can just be a savings account, right? So if we put things in buckets, it's easier to manage our cash flow, and we're not going to have as many surprises because we know that the cash is there for taxes when we pay them quarterly, or whatever it may be.
Fantastic. Let's move into the first section. So the first section is really self-explanatory. It's total commission income, and it's representative of the entire year, which for this particular guy was $216,207.06. This is very easy to read. The next section is expenses. And let's go through and talk about the percentages. Could you do that, please?
Yeah, absolutely. So that's what I really like about this specific P&L. It's got the percentages of the income, right? So, like we alluded to earlier, the advertising is in line with what Peter is coaching his clients to do, right? So that is right about 10%, right? Payroll is about 22% of the earnings, right? So with this specific P&L, we can kind of figure out exactly on a percentage basis where our money is going relative to the commission that we earned.
Excellent. And then we move down into, other expenses, software, licenses, vehicle repairs, et cetera, et cetera. Okay. Net operating income. You want to speak to this?
Yeah, absolutely. So this is the net, again, that take-home pay that you would get before taxes. There are a couple other things on here, right? This particular realtor has a car, a vehicle through his business. It's titled in the name of their business, and they did a trade-in. That's why you see a gain on sale of vehicle and depreciation expense. But ultimately, what we want you to focus on here is the net income, the $99,000.
Great. So let's get into the Q&A. We wanted to make this very brief yet impactful. We are here to answer any questions you might have. And in answer to the question on the chat, you don't see the coaching expenses there. This particular person took time off from the business and also time off from coaching during that period of time. Any questions right now in the chat or otherwise that you guys would like to know about?
I see a question here. They're asking, what version of QuickBooks do you recommend? We have no employees, so there's a couple different really basic QuickBooks that I do recommend. The first one is QuickBooks GL, but you can only get that one through an accountant, and it's much cheaper. The one that you guys have access to, if you're not working with an accountant or a CPA, is Simple Start. That's probably the main one, and that one, I think it's around $30 a month. What else do we have here?
Lanita, what else would you like to know about reading the P&L? Feel free to unmute yourself. I'm happy to go back and revisit, but what we did talk about, oh, I got you. What we did do was we did teach that you read the P&L from top down and you work from gross income. And it's interesting, and I need to see who this is. Steph, I appreciate the question. What is the recommended income we should have to begin working with your company? We work with people that make as little as 50,000 all the way up to people that are making over $1 million a year. And we have coaching solutions for people, and we are sensitive to the amount of money that they're making. And We build strategic plans over a 36-month period, and we have expectations of growth during that period as well.
I see a question here from Tommy Watson. Doesn't the income factor into the decision to go S-corp versus LLC? It absolutely does. What you have to do with an S corporation is you have to pay yourself a reasonable compensation as the owner of the S corporation. So there are multiple ways that we figure out what reasonable is. But one thing I do want to mention is, as a small business owner, you wear multiple hats, right? And so the time you spend as a realtor generating income and doing the high level realtor stuff shouldn't cost you the same as the stuff you do that where you're filling out paperwork and some of the more administrative stuff, right? So there are formulas that we use and softwares that we use to really dial in on your officer compensation for your S corp.
Excellent. Lanita just asked, I do have QuickBooks, but so unfamiliar with it. I would like to have a moment to talk about it personally on a phone call to understand and learn how to compare growth. Your best bet would be to talk to Fady about that. And all you have to do, Lanita, is to scan the QR code at the bottom of this page, and you will have their information. Melissa asked, does some sort of overlay or app exist that indicates to a realtor what percentage of their income should be spent on any one line item? Let me answer that real quickly. We have percentages that we allocate for most things in terms of expenditures and on a percentage basis. And we would walk through what it is that you're trying to accomplish, and we would establish those goals over time. Lanita, my bookkeeper does not have time for me, as I believe I need to understand it. Diana, can an S-corp pay for health insurance, and how can I deduct the health insurance payment from the S-corp? Fady?
Yeah, so that's a really good question. So with health insurance, if you're a more than 2% shareholder in an S corporation, you're required to include the health insurance on your W-2, and then that allows you to deduct it on your personal tax return. I can go, I could talk separately about that topic if you wanted to reach out to me, but it's very nuanced. It's a great question.
Let me ask you guys a question. You can answer in the chat. Would you guys be interested in a class about corporate structuring? Lanita, good. And yes, we do work with agents in California.
Yep, absolutely. All
QuickBooks,
50 states.
great. Oh, look at all those answers about corporate structuring. That's wonderful. QuickBooks, do my payroll. Do I still need to pay quarterly estimated taxes?
QuickBooks does my payroll. So yes, because well, it depends. I don't know your full situation, Lanita, but it sounds like if you're doing payroll, you must have an S corp then, and if you're withholding taxes on your payroll on that W-2 and not paying quarterlies, like quarterly estimated tax payments, that means you're not covering that net income number, right? That, remember that from our previous example, that 99,000. Then you're only paying taxes on the compensation that you're receiving as an owner of the company.
And so what you're saying, Fatty, in that particular example, if we went back, you're only paying taxes, payroll taxes on $48,000.
Yeah, payroll, and it sounds like if she's running payroll, she's taken out federal withholding and her state withholding as well. But then the rest of that net income, she's not paying tax on.
Yes, that's amazing. Anybody else have any question? Fatty, are you licensed in Illinois only, or do you have fluent tax issues, and are you fluent in tax issues in all states?
Yeah, so I'm in all 50 states. All the big cities. We've got multiple clients in New York, California, Florida. So yes, we are fluent in all 50 states.
That's amazing. I'm going to ask the question. Goodbye, Lanita. Have a great day. Happy flight. Um, what did you guys get out of this class? And it's always interesting when I ask this, the different answers that we get. So I'd love it if you'd speak up in the chat and tell us what it is that you received out of attending this. Oh, Melissa asked,
Yeah.
what portion
Yeah,
of your
that's a good
business?
question. So, a little bit more about my background. I have my real estate license as well. So while I was taking the CPA exam, I had a little bit of a break, and I took got my real estate license, and that's kind of what got me into this field, right? So, I would say 40 to 50% of my client base is realtors.
Out of out of a pool of about 400. Is that correct?
Yep, correct. Yep.
Yeah. Jay, this was too short. We would encourage you to get in touch with us and ask any specific questions that you had. We wanted this to be brief and impactful. Alvin, I appreciate your comment, a better understanding of how to read a P&L statement. P&L statements are very, very simple. They can be daunting if you don't know how to read them. And so what we're recommending is that you just consider it to be, you want to work from the top down, and it is indicative of the health of your business.
Yeah, and I would say also, if you have specific detailed questions about your specific P&L, reach out to us. We'll analyze it with you.
Stacy, thank you for your comment. Totally love going over the P&L because I need to see the chart of accounts because I'm clueless and have never in 23 years as an agent been on top of my finances. You guys, let me say this. Finances can be one of two things, finances and tax planning. It can either be a huge, energizing experience that empowers you into growth, or it can be a vampire that sucks the energy out of you. And what I want to point out is that that's a choice. That is a choice. And you can start empowering yourself today, by making healthy financial decisions. If you are behind in your taxes, that's okay. The IRS will work it out with you. And Fady, tell me about your tax resolution services very quickly.
Yeah, absolutely. So, it's very common for people to have tax issues, and, one thing leads to another. It becomes a burden, and people don't file their taxes. So, again, it's a very common thing. We step in and really take that burden away from you. We represent you in front of the IRS if you have back taxes, and we also, we're going to file the unfiled taxes for you, and then really, really go to bat for you in terms of there's many different options, right? There's something called an offer in compromise. There are installment programs. There's a lot of ways that we could, rebound you and get you back up to speed.
Please talk about how we can get one-on-one help when the busy tax season happens. Some of us are out of state. Go ahead and address that, Fady.
Yeah, so I mean, we do these things, right? We do a lot of calls on Zoom and Teams. So that's where we can really sit down and work with you. During tax season, we are primarily focused on, the compliance work and filing the taxes, because really, we're filing all the tax returns that for all the agents that we've been working with throughout the year for, for example, 2024, right? A lot of the planning that we do really happens in the summertime after tax season. And one thing I would mention is, this is crucial in my opinion. Tax planning has to be proactive. You're not tax planning when you file your tax returns, right? Really, a tax return is a compliance thing, right? We've done all the work, and we're now ready to file the tax return. The clients that really get the most out of our strategies and our tax planning are the ones that do it throughout the year, right? So starting in May, that's when all the tax planning starts.
Just so you guys know, I'm putting my direct email and cell phone number into the chat. And I'm going to do the same thing for Fady. I'm going to recommend that you guys, actually, Fady, I'm going to let you put the contact information in the chat.
Yeah, I'll do that.
I would recommend that if you're going to contact us via text, that via phone, that you initiate via text. Because I tend to have between 40 and 50 appointments per week, and I specify time. You guys, I'm really excited for you. I'm excited in your participation. I'm excited in your willingness to learn about this. And again, what I want you guys to understand is that your financial situation should be empowering and rather than energy draining. And the first steps of this are just to take the first steps. And that is why Fady and I are here. We are here to serve you and your success. Fady, did you have any other remarks that you wanted to make?
Yeah, no, it's been awesome talking to you guys and looking forward to helping you guys out.
Wonderful. Any other questions or comments right now? Melissa, we just put it in the chat. Oh, did we not?
Oh, it's saying to host and panelists.
Here, I'm gonna send it out to everybody. Mine, you can just copy and paste it.
Oh, got it. Yep.
There we go. There's my contact info, which is my email and my direct cell phone number. You guys see it now? Yeah, you must see it now.
I just did the same. And yes, Melissa, I do have a team and you can specifically work with me.
All right, guys, have a wonderful weekend. I look forward to talking to many of you. And yes, there will be a recording of this webinar posted. And thank you guys so much for your time. Have a wonderful day.